Hi, good evening, everybody. It's Brian from Bearable Traders here, Wednesday, January the 5th. And we've had 3 days of trading so far in this new year, 2022. And they've been pretty wild and crazy. So, this is the midweek video where we'll take a look at how we've been trading so far and try to figure out where we're going for the rest of the week here. And maybe in the rest of January. So, let's get down to it. So as always, I like to start out with taking a look at the yields and the treasuries because it often drives the direction of the market. And in this case, it certainly had an impact both yesterday and today because you see here we were sort of just chopping in this range when I looked at it on the weekend. And of course, Tuesday and Wednesday started to really ramp up in terms of the yield on the 10-year. The 10-year really took off after the release of the Fed minutes, which turned out to be a lot more hawkish, as they call it, in terms of the Fed's sort of more aggressive stance on possibly reducing the balance sheet and interest rate hikes. So the market was a lot of people in the market were not expecting them to be quite as hawkish when they started going through those minutes, and subsequently you had the big sell-off in the market, and these bond yields start to spike up here. And you can see here we're out of this this prior double top. We did break out today. I would expect it to check back a little bit, maybe come back to this 1.65 level, and then maybe start to head higher from there. But certainly momentum on the side of interest rates going higher at this point, which will continue to put pressure on the high PE multiple stocks. The TLT, again, the 20-year Treasury bond, the actual price of the bond dropped as the yields went up, so not surprising there. Pretty much an engulfing candle on the transports. We're right back down to this 50 moving average, and we'll have to see if this holds because again we could see further downside. You can see momentum is definitely coming out of the transports after we kind of topped out here again right at this prior level of support, which became resistance here and now has become resistance again. The Dow, again, following the transports lower, as did all the indexes. You can see here we did actually make a new all-time high before significant selling off there, and probably going to head lower, maybe head back down to this 36,000 level. The IWM, big hit today. You can see how it got right back up to this area, sort of this area it's been churning in pretty much all year. We did get this little breakout and then rejection and pullback. And again, this 227 level proved to be too much of a good thing, and now we're pulling back again, and again watching for that 212 level on the IWM to hold as support. The Qs, again, big sell-off. We do seem to be in a bit of a range here on the Qs, so I would expect maybe some support somewhere around this area, 380 on the Qs, and maybe a little bit of a bounce back. Remember, the interest rates are still low, and there's still it's still that TINA situation where there's no other alternative for people's money. So money may come back or will come back into the market after we have this little hissy fit, I guess, if you want to call it that. So you can see here this was resistance, finally broke out on the SPY and then came right back and finished the day right back at these prior levels of resistance. So again, it'll be interesting to see if we can actually hold that. You can see here we made a higher low. So again, I'd be looking for some support here, maybe around this 50-day moving average on the SPY. The dollar, again, the dollar's just started to strengthen today, especially on sort of the prospect of higher interest rates. Higher interest rates make the dollar more attractive, and therefore it did catch a bit of a bid today. And the VIX, of course, popped back up after coming right back down here. Every time it seems to come down and test in this area, it seems to find some footing and want to go higher. So we had a double bottom here, a bit of a higher low here, pulled back, and probably going to be heading higher Certainly the VIX, given the amount of selling, the VIX was off the high of the day, and possibly could have been a worse result on the VIX. It was a pretty big move, so we'll see where things go tomorrow. Let's take a look at the sectors and see which ones of the ones, they pretty much were, everyone was in the red. Which ones performed a little bit better than others. So you can see here a lot of the high PE stocks that were being communications, technology really sold off today. Technology took the big hit. Discretionary again took a hit, pretty big hit. Materials didn't actually fare that badly. They are well off the high of the day, but you can see here where we went out was almost flat on materials. Industrials, again, tried to go higher, sold off. The energy sector actually had a pretty good day. And again, you can see here, really, we're just down a fraction on the day. We were much higher, but we sold off. In a market like this, when you get this sort of broad selling, it doesn't matter. Sometimes there's margin calls. People's positions get taken out to cover margin requirements. So it doesn't it's really can be, the selling can be indiscriminate. It just can be just about anywhere, because oil was up today. The energy complex ended up taking a hit, even though it was marginal. Same with, but you can see here the ones that, the sectors that did the best were the defensive staples. You can see here just fractionally lower on the day. Utilities fractionally lower on the day. Even with a prospect of rising interest rates, which typically is good for the financials, had a great day yesterday. But you can see here just broad-based selling right across the board. Didn't matter which sector you were in, you probably ended up down on the day. So, well, that's it for the evening. Again, this is my book on Amazon. This is the ad part. This is my book on Amazon, How to Swing Trade, Strategies of a Swing Trader. And just in summary, my feeling right now is it's good to be in cash. I still think that there's going to be a bid in the market. It's going to be pretty volatile for the next couple days or so into the rest of the week. So just get in cash. Watch those levels on your indexes and specific stocks that you might be looking at, and choose your entries carefully. So we'll see you all hopefully in the Bear Bull Trading Room in the morning, 8 o'clock. We'll start out live on YouTube, and then going through the pre-market show, and then trading the market open at 9:30. Take care, everyone. Have a good night, and hopefully we'll see you tomorrow. Bye for now.